CNBC TV 18, celebrating 15 years of leadership.
Hi, welcome back. You're still watching Taking Stock on CNBC TV 18. We have been in conversation with Andrew Holland of Ambit Investment. But before we go back to him, what does 2015 hold in store for global markets? That's the question everyone's asking. CNBC's Bob Pisani has been looking at some potential triggers for markets in 2015. Take a look.
Russia will be an even bigger problem next year, though Europe will surprise and Google gets serious in its fight with Apple. Here are 3 predictions for 2015. Boring, they're not. First, Russia defaults on its debt. The Russian ruble has hit new lows against the dollar. Oil has dropped 40%. Crude oil and petroleum products are half of Russia's export revenues. How will they pay for imports? They will default on their debt. Second, the European stock market outperforms the U.S. stock market. No recession next year in core Europe. The Eurozone is stuck in a long-term, slow and no-growth environment. But the core countries will not sink into a recession. The euro will remain weak, boosting trade. After a year when expectations were constantly revised downward, European corporate earnings will begin turning around. Deflation will remain an issue. Third, Google buys PayPal. PayPal is scheduled to be spun off from eBay sometime in 2015. It won't happen. Google will buy PayPal and combine it with Google Wallet to ward off Apple's Apple Pay.
All right, that was Bob Pisani. Let's go back to our guest then. Andrew Holland is still with us. Andrew, in terms of mid-cap ideas, I know you won't give us any names, but any themes that you're going to play, not just for next 2 or 3 months, but from a 1 or 2 year perspective?
Yeah, it really goes back to our mega supply theme because it's multi-cycle, it's multi-market cycle, and it's obviously multi-sector. So you can go across all the different sectors, look at who's supplying. So, for example, if we're looking at, say, India laying down, billions of dollars of gas pipes, who's a gas pipe supplier? So we've gone across all sectors and identified those companies, which some are large cap, but a lot of them are in the kind of mid cap and below range. So there's huge operational gearing for these companies, and some companies even have financial gearing as well. So it's that's where we think you're going to make the most money over the next 2 to 3 years.
Okay, that's one interesting theme you've laid out for us. Next week, Andrew, we have that PSU bankers conclave that will be held. Everyone's talking about that, where the Prime Minister, Finance Minister will be meeting with the PSU banks. What's your view on the sector as a whole, and how do you approach it in 2015?
So we like the banking sector because of the cuts in interest rates, which we expect next year and over the next 2 to 3 years. PSU banks is still a difficult one for me to gauge because, I don't mind renting them, but, to own them, I have to believe in the management. And it's still, I need to see that change, really, where a PSU bank will act like a private bank, and I think we're still some way away from that. So, they will benefit, obviously, from lower interest rates, but I know that the private banks are probably going to take much better advantage of that than the PSU banks at this stage.
And what did you make of Bharti Airtel's move on Friday to increase tariff for voice over internet protocol? And do you think it's a smart move? Is it a foolish move? And how would you expect the sector to progress from here? Do you expect other companies to follow suit, or would it be a risky model for Bharti from here on?
Yeah, I haven't really focused my mind on it, apart from wondering if I'm going to be charged more for using it. Would it make me change to another operator? Unless it's a very simple procedure, then probably not. And plus, I'm actually not with Airtel, so it's not going to affect me in the short term. If the other providers do it, I'm not sure what percentage of users use this facility at all, if they do. So maybe it's just trying to take away a free cost and make a revenue from it. I'm not sure.
You aren't you don't have any recommendations on the stock itself?
No, we're not. We're not in the telecom sector. Again, it's a sector which, have a lot of regulatory problems still to go through, and it's not really. We're not going to see a doubling of earnings again. So it's a sector we don't need to be in.
You did mention that you would slightly stay away from consumer, from some of the defensive names, pharma, etc. So if one has holdings in these, should they churn, move out of them and move into cyclicals, or do you think that you should just hold on to these stocks and then increase weightage in the cyclical names?
Yeah, I think it's the latter, actually. I'm not saying there's anything wrong with these companies. I still love Nestle. But at 45, 50 times 1 year forward, I just can't buy it in terms of thinking about will it double its earnings over the next few years. So it's a great sector to be in for the longer term. And what I think will happen is that earnings will continue to move ahead. Right? But in this kind of market, what will happen is that the PE will contract over time. So the earnings will catch up to the PE rather than you're going to see that the share price is falling. So it's more of a gradual derating over time. The share price will move up in good markets, but nowhere near the kind of the themes that we're thinking of.
So Andrew, would it be fair to say that your portfolio right now would be slightly low quality, quote unquote, as they call it in our TV studios, that all the high dated companies, all the infra companies, all the cyclical companies which not many want to touch, but you're actually going contra buy on that. Would it be a fair statement to say that?
No, it would be a very unfair statement. I wouldn't look at buying low quality stocks.
No, the perceived low quality, as I said.
No, I think on the cyclical stocks there's a lot of high quality companies out there, and again you've got to look 3 years forward and say where will this company be and what will the earnings be, and that's the exercise we've done and continue to do across all the sectors. So it's not got highly indebted companies. We're looking at those companies at the moment because we think interest rates will fall down. So a theme that will play through in the second half will be companies with high financial leverage. It's not when we think about financial leverage, it's not something that we really kind of get excited about. Operational gearing is something I'm very excited about, but financial leverage isn't. But once you get financial leverage, and if a company can see through in terms of where the business is, and it can now get working capital and start to move forward again, that's the kind of company we'd want to identify.
Okay. You were talking about this suppliers theme. So if you take a sector like autos, between an OEM like Maruti and a supplier like Motherson Sumi, which one would your bets be on to give you higher return? The supplier?
Parts supplier, yeah. Because that's where you're going to get the operational gearing. Most of these companies are running at, maybe not Motherson Sumi, but are operating around 40 to 50% manufacturing capacity. Now, once that starts to increase, it's top-line growth, but of course it's variable costs which no one can work out, and then it falls straight through to your bottom line. So what happens, if you take an example of, say, Barrett Forge, if you looked previously what analysts were forecasting and what the actuals were, they were multiples away from what the actual results were, and then they had to do catch-up. So this is what we expect to happen over the next 2 to 3 years as operational gearing comes in across many different sectors and companies that analysts will always be chasing, and that's where you're going to get 20% earnings growth.
What about metals? We haven't discussed that. It's one sector where the opinion right now is divided. It's completely split, actually. The stocks have not done too well, but there's a call that maybe 2015 could be a year of metals. Would you share that belief, or what's your broader call on metal names?
No, we like the metal names, but of course what you're facing at the moment is a global slowdown in commodities, so that's affecting the overall sentiment. But I think once things stabilise, and I think that will be through this problem probably by mid-January, then you'll start to see the metal companies and share prices start to react more positively. But I think in the very short term, probably tread water for the time being.
All right, Andrew, we'll wrap up this conversation on that note. You have a great year ahead, and again, greetings of the season to you and your entire team. That's the word coming in from Andrew Holland. But before we wrap up the show, what are the key cues to watch out for next week itself? Varinder Bansal is here to give us a quick wrap of that. Varinder.
Well, thank you so much. Clearly, maybe the participation could be low because of the holiday season, but there will be many stocks and sectors to watch out for next week. The first, of course, will be the auto sector, where we are expecting the sales number coming in on 1st January, that is Thursday. Expect Maruti, TVS Motor, M&M, Tata Motors to report their numbers. On 2nd Jan, expect Bajaj Auto, Ashok Leyland, Hero Honda, reporting their numbers. Hero MotoCorp reporting their numbers. Also, if you're watching out for something on Monday itself, then watch out for Jindal Stainless, that is JSL Stainless. There's a board meeting which will be considering and approving scheme of asset monetization and business reorganization plan. That stock was clearly very active on Friday, up by nearly 12%. Jindal Photo and Jindal Polyfilms could be two stocks to watch out for on Monday itself, because again there's a board meeting to consider merger between both the companies. Again, both the stocks have been very active last week. They have been gaining, especially Jindal Photo. And watch out for if anything comes on SpiceJet. You know, there has been revival meet along with various departments and of course the executives of SpiceJet on Friday. Maybe some announcement comes in and the stock will be active on Monday on back of that announcement. And of course, don't forget to watch out for the entire public sector banks, because we all are waiting for that crucial Jan 2nd and 3rd meeting between the Prime Minister, Finance Minister and public sector bank executives. All stocks were active on Friday, and maybe next week as well they will be active.
All right, those are the events that you can watch out for next week. But that's all the time we have on this edition of Taking Stock. We'll see you again with all the market action on Monday morning. Till then, have a good weekend.
CNBC TV 18, celebrating 15 years of leadership.